All right, y'all, we back at it, y'all. Welcome back. You already know what time it is, man. Welcome back to the Financial Corner with your boy Buck Bandit P, here with another video for y'all, man. I've been working overtime like crazy, man, so I couldn't even get these videos out. My 9 to 5 had me going crazy, but I had to come and give y'all this game, man. It's been on my mind. It's been just scrolling around in my head all this whole time. I've been on overtime, just working like a mug, thanks to the snow. So, man, I hope everybody stay warm out there. I hope everybody got out their parking spots and all that. I know people was plowing y'all in. I'm sorry, I might have plowed a couple people in. Listen, man, we gotta clear the streets, man. You grab a shovel, get it popping. But anyway, man, let's get right into it, man. Before we get into it, though, my bad, I almost forgot. Make sure you like the page. Make sure you subscribe, hit the notification bell, all that good stuff. Even if you don't hit the notification bell, that's cool. If you only here for the stocks, you ain't here for the fitness. If you only here for the fitness, ain't fit, whatever. Just make sure you tapped in with your boy. So let's get right into it. Investing versus gambling. Let's get right into it. Investing versus gambling, because a lot of people is about to gamble their wealth away trying to hit a big win, trying to hit a big parlay. So let's break it down. Investing versus gambling. Investing is not gambling. Investing is not gambling. One more time for those in the back who didn't hear me. Investing is not gambling. So stop thinking it's gambling. It is not. Investing involves risk. However, it is not gambling. Let's go through it. Everybody love to say the stock market is like gambling. Oh, I ain't putting in that. It's too risky. Man, I'm going to lose all my money. This, that, and the third. That's not the case. That is not the case. You're going to lose all your money if you betting. If you investing in the market, 9 times out of 10, you're not going to lose all your money. 9 times out of 10, your investment's going to mature. So, why do people say the stock market is like gambling? Where do people get that from? Why do people say that? Because most likely it came from somebody who lost a lot of money in the market, probably real fast. They didn't know the rules. They didn't know what they was doing. They skipped levels. Go back, watch my other videos and see the different levels. And they just treating their brokerage app like a parlay, like a ticket. They looking for a quick flip, a quick bam, bam, that dopamine hit. Investing is not that. Maybe when you get it better at investing and you got some knowledge and all that, and then you get into options, all right, now maybe you can get that dopamine rush with options, but it's still not going to be the same, because you're not going to be putting all your chips on black and just being like, all right, let's go. No, because if you got options, you already got your retirement. We already went through it. So, you know what I mean? But investing is not going to give you no dopamine hit. It's not no rush. It's not no quick flip. It's not no, oh man, I got to put on this because this stock is moving. That is gambling. Most people do that. That's gambling. That's not investing though. So let's go through it. What is gambling? Let's break down what gambling is, and then I can show y'all and explain to y'all how investing is not that. So investing is when the odds are stacked against you. Let's start there. The odds are stacked against you when you're gambling. So it'd be what, 20 to 1 odds or something crazy, and that's why the payout is so crazy, because we already went over risk and reward. Watch my other video on risk and reward. The risk is so high that the reward is going to be real high, because most likely you're not going to win. How many times people say, oh man, I just needed one more thing on my parlay to hit, and they already know that. And the second point of gambling, this is where it gets critical. Time works against you with gambling. The longer you stay gambling, the more likely you are to lose. That's why casinos give you free drinks. And they trying to keep you there longer, keep the music nice, the girls look nice, you know what I mean? Like the lights is popping and all that, because they want to keep you there longer, because they understand if you stay there longer, more likely you're going to lose. Like the house always wins. The house always wins. The odds are stacked against you. That is gambling. And the last part about gambling, it's emotional.
Then we just go over that. It's emotional. Like when you feel like you about to win the bet, like you be and when you feel like you about to lose, you're like, oh, like it's real emotional. It's highs and lows, and you getting that dopamine hit, you getting that rush. It's like a roller coaster. It's like a roller coaster, but you playing with your money. You don't want to be on a roller coaster with your money, because that's how it get bad. It get real bad real fast. So emotion drives your decisions when you're gambling. That's not investing. So let's go over them again, and then we're going to get into the investing. Investing, the odds are stacked against you. Most likely, that's why you hear sayings like the house always wins. Number 2, time works against you. The longer you're gambling, the more likely you are going to lose everything. And 3, emotions drive your decisions when you're gambling. You're emotional gambler. Like nobody is going to be putting money and just be super calm. It's like, no, you hype, you invested in the game. You looking like, you cursing people out. You know what I mean? People cursing players out because they went under on their yards or on their points on it because they betting. It's a bet. The bet is so emotional, you get super tied up in it. And then on top of that, this is why it's dangerous, because once you get emotional and you lose money, now you try to make it back. Oh, I lost 50. All right, I'm betting 100 this time because I got to get that 50 back. Like you're going to keep chasing. And the longer you do that, the more you're going to lose. That's gambling. So don't be caught in that gambling cycle. Please don't be caught in that gambling cycle. But this probably why this how they get you with gambling, why you keep coming back. Because you'll hear about somebody who hit. And you might even hit once, maybe even twice. But that's about it. You ain't going to hit more than that. Because the longer you stay gambling, the more likely you're going to lose. The house always wins. All right. And last part of gambling relies on luck. Luck does not compound. Go back and look at my video on compound interest and you see why that's important. Luck does not compound. You can't compound luck. Eventually you're going to lose. So let's talk about investing. What is investing? Investing is you're owning a piece of an actual business. Let's say that again. Investing is you actually owning a piece of an actual business. That separates it right there. Gambling, you don't own nothing. You own your ticket, and once that ticket is out of it, you lost all your money. It ain't go down 10%, it ain't go down 5%. You could still have a little bit left in there. It's all gone. So investing is you owning a piece of business. That business produces value over time. So in this case, time works for you. Investing, time works for you. Gambling, time works against you. The longer you are invested, more likely the more money you're going to have because of compound interest. Go back and watch my video on that if you need more info and understanding on why compound interest is important. And another part, it's not emotional. Investing is not emotional. Investing, you have to be patient. Investing is going to test your patience. Investing is going to get you more disciplined with delayed gratification, because the more you're invested, the more your money is going to compound. That is the major difference of gambling versus investing. It's not luck. It's logic. I'm looking at this business. This business has produced this revenue for this quarter, this year. Oh, I'm looking at guidance, where they're going. Oh, okay, this company's going to be around for some time. That is a logical decision. That's not emotional. That's not, I like this company, is going up, let me buy it. That's gambling. That's gambling. People gamble all the time with their investing accounts. That's not what we doing here. We not doing no gambling. We making money. We printing this bread. We making money so we can free our families. We ain't doing no putting it all on black, put it all on a meme stock, and we shooting for the moon. We ain't doing that. Okay, so when you invest, this is why invest involves risk, because you are placing a estimated guess. I don't want to say a bet, because a bet involves emotions and not too much logic. It's just, I want a quick hit. I want to put my $10 in and win 50. That is gambling. Investing is When you taking risk, your risk is, I predict that this company might go up, but this company might stagnate over the next 2 years because of supply chain issues or something like that. So the stock doesn't appreciate at the rate that you thought it was because of other factors in the economy. So that is a risk. That is a risk, but it's less risky than betting. You're betting on productivity. You're betting that this company can keep up with the demand of its product and services. You're betting on the human progress. You're betting on that people are still going to patronize this business. So it definitely involves risk, but it's not the same risk as gambling. These are logical estimates that you can track, see, and measure. You can't really measure gambling. You could just, he ain't get the points. All right, well, now I try tomorrow. But you ain't really measuring. You just looking at games. You're looking at people. That's why sports betting is one of the biggest schemes of this time. I think in like 10, 15 years, they're going to do a study on this era and how so many people lost a lot of money, went crazy, lost their lives behind this sports betting becoming so prevalent in our society. Is not a good thing. It is not a good thing. So now the stock market, it goes up over long periods of time. This is proven over a 20 period of time, over any span since the stock market has been since its conception. Over a 20-year span, the stock market has never been down. So any 20 years you pick, it's never been down. So that just goes to show historical data shows us that if you stay invested for at least 20 years, most likely you're going to have more money than when you started, because that's what history has shown us. And history might not repeat itself, but it rhymes. So let's break it down all the way down. The separation nobody talk about is, like I was saying, the longer you play when you're gambling, the more likely you want to lose. The longer you stay invested, the higher odds of you winning. So time for gambling is like poison, but time for investors is like jet fuel. Cause we out of there. Once that compound start hitting, we gonna go right to the moon. We don't need a quick hit like that, because we just compounding. So that is why investors sleep very well at night, because we know our wealth is getting built. we know that our wealth is getting built while we sleeping, and that's why you see day traders, people who gamble a lot, people they be looking for the next chart, looking for the next hot thing. It seems like they be doing a lot. It's because they are. It's because they are doing a lot. Because that's that excitement, that dopamine. Investing is, so you're gonna have to unlearn that. Because you're gonna have to unlearn, you gotta be excited to make money, because real money is made very steadily, very boring. That's how all the money is made, by boring companies. So, like I said, investing can turn into gambling. Let's talk about this part. Investing can turn into gambling, like I said, when you putting all your money on one stock. Oh, GameStop went up. Oh, it's going up. Let me go put some money in this. Oh, this stock just went up. Oh, it's green. Let me go put some money in this. No, you ain't did no research. You don't know what the company is, what their product or service is. You don't know why it's going up. You don't have no information, but you just want to put money in it because you seen somebody post that they made some money in this. No, that's gambling. Stop gambling with your brokerage account, because what you're going to do is you're going to discourage yourself, and you're going to end up not investing, and you're going to end up talking yourself out your wealth. We ain't doing that. We ain't talking ourselves out our wealth over here. We going to apply these principles to our life, and we going to make sure we eating. So no YOLOing, no going in on a meme stock, no, oh, Buck Bandit P said Google is, let me put all my retirement on Google. Stop it. Don't do that. Don't do that. I didn't say that. So don't even do that. Like, we got to understand risk versus reward. Go back and watch my video on risk versus reward. You always want to cover your ass. So, the final point I want to touch on to this is risk versus recklessness. Because a lot of stuff has risk. We went over it. Going to a job for 30 years and think that you're going to have a pension by the time you retire, that's risky. Because it's not guaranteed. Nothing in life is guaranteed except taxes and death. So get that in your head right now. Nothing is guaranteed except taxes and death. But we could look at some historical data, historical facts, and figure out where stuff is going, where stuff is moving, and how we can position ourselves to, be in a better place so we can take care of our family. So investing, you spreading your money out. You don't, like I said, don't put all your money on one stock. Me, preferably, if you just starting out, shout out to Ian, man, 2Stock Shakur, the master investor. Make sure y'all tune in to Market Mondays, man. But yeah, Ian always say, just get 2 tech, 2 index. 2 tech stocks, 2 index funds or ETFs. That's all you need, and put all of your money into those 4 until you get that up to a nice amount, and then you want to open up a smaller little investment account for maybe a 3 to 5 year, and then we get to the options. But you want to just have 2 tech, 2 index. You don't want to have 1 stock. You don't want to have 12 stocks. 4 to 6 companies, and just dump your money in them. Dump your money in them and you're going to be good. You got to diversify. With gambling, you ain't doing. You putting all that money on that one ticket, or you might get more tickets, but it ain't like you can't diversify the ticket, my G. It's one ticket. Once it's gone, it's done. You lost all your money. It's a wrap. So you want to spread your money out. You want to understand that in stocks, you are a owner. When you purchase a share of a company, you own a part of that company. That is vital. You don't own nothing when you're gambling. And when you're buying stocks and you're an investor and you understand the game, you know it's going to be ups and downs. Just because it went down 5% one day, you ain't going to panic sell and be like, oh, let me take my money out. You can be like, oh, it's down 5%. If you did your research, you going, no, oh, all right, this is just this is just that. It ain't really nothing serious. It might be an opportunity to bring your buying costs down. Your average price on that stock down. You might have bought it at 4, it went down to 375. Now you can get it for 375. Now you got even more shares for a lesser price. So when it run up, you're going to eat even more. So we got to understand the ups and downs. Just because it went down don't mean you down. It just means that people not feeling too good about the stock. That's all it means. And we playing for years. When you gamble, you playing for that game. Once that game over, it's a wrap. Investing, we looking 20 years down the line. We ain't looking at today, we ain't looking at tomorrow, we ain't looking at next year. We looking 20 years down the line. When you really gonna need this money and you be like, dang, I'm happy I put this money up. Cause taxes gonna get higher, inflation gonna get higher. No telling what wars and economic stuff gonna happen within this 20 years, man. You think we not gonna go through another recession in 20 years? Stop. So you gotta cover your ass. Don't go all in like gamblers. Don't chase your losses. Oh, I lost this, I gotta get it back. No. Stop trying to get instant results. That's gambling. That's not investing. Investing is boring. If it feels exciting, you probably doing it wrong. If you got a rush and you checking your account what's the news going on and what you're probably doing it wrong. That's not investing. You're doing some other stuff. You might have to go get some therapy and really buckle in and figure out why you're so frantic. Because it's investing. You put your money in and you go do some other stuff. Build your business or something. Go do some push-ups. Go, you know what I mean? Go take your girl out or something. Take your wife out. Do something else. But we ain't stressing about this money because it's going to be there. If you doing this now, you already rich. You just got to keep doing it. You know what I mean? So don't confuse the two. Don't confuse investing with gambling just because Robinhood give you the, when you swipe up, it'd be like, yeah, yay. You get the little dopamine rush, like, oh, I bought a stock. Oh, yeah. I just bought a stock dance. You know what I mean? No, it's not gambling. They just trying to get you that dopamine rush so you can buy more stocks. It's not gambling, so don't get it confused. Don't try to do instant, oh, I'm trying to make a quick flip. Oh, let me put this day trade in right quick because I seen it. You don't know the game. You don't know nothing about no Fibonacci levels. You don't know nothing about no 1348, but you don't know nothing about that. But you trying to get in an option play. No, learn the game. And don't worry about the social media flex. Don't worry about the screenshots. Don't worry about that because they going to show you, oh yeah, I just won this. They not going to show you what they lost. That's why on my Instagram, I don't even show I just show losses. So if you want to get in this game, you going to know that it come with losses. It comes with losses. You ain't just going to get in here and think you just going, oh, I'm good. No, it's going to come with losses if you try to jump out here on the deep end and think that it's a game. But if you stay invested, it's always going to come back. And like I said, don't flex. Don't do none of that stuff, man. All right, and last thing we're gonna touch on this. I know I said that was the last thing, but this is the last thing we're gonna touch on. It's a simple test right here. The $5 a day. You know I gotta do. I love it. Shout out to Dr. Boyce Watkins, because people can't say nothing to me about you don't got money. You got subscriptions that you forgot that you even had. You've been paying on it for the last year. So like, stop. You got a little $10, $20 to put in the market every time you get paid, but you just don't got the discipline. You just don't believe the game going to change your life. And once you believe it's going to change your life, you're going to start treating it like it's going to change your life, and it's really going to change your life. So save money, invest. You know what I mean? Have a different mindset. I don't know, dopamine rushes. This shit is going to be boring. This shit is going to be just steady and just going to be go with the flow. Ain't going to be no craziness going on. The market might go up and down and all that. I'm just going to keep just putting my money and just keep doing that. Because this the thing. You going to thank yourself later after you'd invested that money versus gambling that money. Because when you gamble, it's a guarantee. If you don't win, you're going to lose all your money. Investing, even if you don't win, even if you don't win, you still not gonna lose all your, odds are you still not gonna lose all your money. So that's all I can say about investing versus gambling, man. Let me know, like like which one you prefer. Let me know, like, were you a gambler before and now you trying to invest? And like, let me know, like, but just know this is a long-term game. This is a long-term game. This is not no quick flip. This is not no, I'm trying to get, so take that $5, all right, and put it in an account. Open your account today. Open your stock account today. Stop gambling. We got the FanDuels. We got what's the other one? MGM Grand. We got all these apps on our phone that we just put in $50, $25 and every other day. I implore you, I beg you, just open up your stock account and put like $10 in it every time you get paid. Please, just do that for me. Please, just do that for me and your future self, please. That's all. That's it. That's all. So just $5, man. It don't take a bunch, man. $5 could grow so much if you just consistently doing it every time you get some bread. Every time you want to spend, put $5 in that joint. You want to go out and do it, put $5 in there. Yo, it's going to build up and you're going to start to see the compounding. And it's only $5, so you ain't going to trip when it's, all right, whatever. I ain't tripping. It went down a little bit. But it's going to get you in the habit of investing. A lot of y'all in the habit of gambling, so you just used to putting $25 in there every time you're getting paid and used to being broke. Stop being broke. Stop being poor. Broke is an economic point in life that, you can get out of that. Poor is a mindset. You're never going to stop being poor. That means passing over opportunities repeatedly. Stop doing that. This is your opportunity right here. Don't pass it up. I don't want no money. Give me a like, a subscribe, a share, or something like that. I want you to open your investing account and tell everybody who you know to open up their investing accounts so we can go out here and get this money. You already know, man. Appreciate y'all for being here. This is an episode on investing versus gambling, why investing is not gambling, and why gambling is not investing. And like, share, subscribe, all that good stuff, man. And I'll see y'all in the next one. So let's go out here and get this money.